Hey everyone, welcome back to Corporate Decoder, where we break down SEC filings so you don't have to. And today we've got a real gem, a behind the scenes look at the Dreyfus Money Market Fund's semi-annual shareholder report. Get ready because this report is a masterclass in how money market funds operate. And believe me, there are some interesting numbers hidden in these pages. Now, before we dive into the nitty-gritty, what exactly is this document? We're looking at a certified shareholder report for a registered management investment company, specifically the Dreyfus Money Market Fund. This tells us about the fund's performance and holdings for the 6 months ending May 31, 2000, ending May 31, 2025. Think of it as a financial checkup for the fund, but with a lot more legalese. Alright, so what's inside this report gives us a breakdown of the fund's investments, its financial statements, and how it's performing overall. It covers everything from where the money is parked to how much income it's generating, and crucially, how it's doing for its shareholders. Let's talk about money because that's what everyone really cares about. This section shows you the costs associated with investing in the fund based on a hypothetical $1,000 investment for wealth. Shares the cost was a mere $27, which is about 0.53% of the investment. That's pretty low and annualized. That means a small ongoing fee to keep your money. Managed service shares, on the other hand, cost a bit more, $50, or 1 point fee to keep your money. Managed service shares, on the other hand, cost a bit more, $50, or 1.00 came in the cheapest at just $13, or 0.26% annually. This highlights the different fee structures depending on the share class, which is common in mutual funds. Now for the big picture, the fund's total size as of May 31, 2025 was a hefty $2,111 million, or 2 cent to $11 billion. That's a lot of money being managed, and it held 90 different investments. That gives us a sense of the fund's scale and diversification. Here's where things get really interesting. The fund's portfolio is heavily weighted towards commercial paper, which makes up 32.7% of its holdings. These are short-term, unsecured promissory notes issued by corporations. Typically, they're used for financing payroll, accounts payable, and inventories. Some examples include securities from Australia and New Zealand Banking Group Limited and Bank of Montreal, with interest rates varying based on SOFR plus a spread. Next up, we have negotiable bank certificates of deposit, or CDs, making up 18.3% of the portfolio. These are short-term debt instruments issued by banks with a specified maturity date and interest rate. The report lists holdings from major banks like Bank of America, NA, and Citibank, NR. These are generally considered safe investments. This is the largest chunk of the portfolio. Repurchase agreements or repos make up a whopping 47.8% of the fund's investments. Repos are essentially short-term loans collateralized by securities. In simpler terms, the fund is lending money and getting securities as a promise of repayment. These are often overnight or very short-term agreements to help manage cash flow and generate income. The report details several of these agreements with counterparties like MUFG, Bank Limited, and Societe Generale, all backed by collateral like US Treasuries and various mortgage-backed securities. In simpler terms, the fund is lending money and getting securities as a promise of repayment. These are often overnight or very short-term agreements to help manage cash flow and generate income. The report details several of these agreements with counterparties like MUFG Bank Limited and Societe Generale, all backed by collateral like US Treasuries and various mortgage-backed securities. Now let's look at the fund's balance sheet, the statement of assets and liabilities. As of May 31, 2025, the fund's total assets, including its investments, cash, and receivables, amounted to over 2.15. The fund's total assets, including its investments, cash, and receivables, amounted to over $2.15 billion. On the other side of the ledger, its liabilities primarily related to management and shareholder. Servicing fees were around $4.4 million. This leaves the fund with net assets of $2.11 billion. And importantly, the net asset value per share for all classes. Wealth, Service, and Premier shares remain steady at exactly $1.00. This is the goal for money market funds, maintaining a stable dollar value for shareholders. This statement details where the fund's income comes from, and what it spends on its main income source is interest income, totaling over $49 million. Expenses were around $8.2 million after some reductions, primarily for management fees, shareholder servicing, and administrative costs. This resulted in a net investment income of over $41 million in fees and Looking at the changes in net assets for the 6 months ending May 31, 2025, the fund saw a net increase in its assets of over $41 million from operations. This was offset by distributions to shareholders totaling over $41 million as well, so the net effect on assets from operations and distributions was pretty much a wash. The fund also saw significant activity in its capital stock transactions with substantial amounts of shares sold and redeemed. Now let's glance at the financial highlights. The wealth shares for the 6 months ended May 31, 2025 showed a net asset value of $1.0 at the end of the period. The total return was 2.01%, not annualized. So that's the actual return for that specific 6-month period. The ratio of net expenses to average net assets, the actual cost of managing the fund, was 0.53% annually. This is a crucial metric for InvestorFix's 6-month period. The ratio of net expenses to average net assets, the actual cost of managing the fund, was 0.53% annually. This is a crucial metric for InvestSpecific's 6-month period. The ratio of net expenses to average net assets, the actual cost of managing the fund, was 0.53% annually. This is a crucial metric for investors to understand the ongoing fees. For service shares, the story is similar with a net asset value of $1.00. The total return for the period was 1.78% and the net expense ratio was 1.00% annually. This is higher than wealth shares, reflecting the different service costs as we saw earlier. Premier shares also maintained a $1.00 net asset value with a total return of 2.15% for the period. Their net expense ratio was the lowest at 0.26% annually, showing it's the most cost-effective option among the three. This data comparing expenses is really important. The ratio of total expenses to average net assets gives you the full picture of all costs involved. For wealth shares, it's 0.54% annualized. For service shares, it's 1.03% annualized. These figures help investors understand what they're paying for the management of their money. The next line, the ratio of net expenses to average net assets, is sometimes even more telling because it accounts for any fee waivers or expense reimbursements that the fund manager might offer. For wealth shares, this net expense ratio is over service shares. It was a fee waiver in place that brought the cost down. To service shares, it's 1.0%, and for premier shares, it's 0.26%. This shows that for service shares, there was a fee waiver in place that brought the cost down to 1.0% from a higher overall expense. The fact that they're waiving fees on service shares is often a tactic to make that share class more competitive. And finally, the ratio of net investment income to average net assets. This shows how much income the fund generated relative to its assets. For wealth shares, it's 4.00, it's 4.4% annualized. And for premier shares, it's 4.27% annualized. These returns are generally aligned with what you'd expect from a money market fund. The report also includes the board's approval of the investment advisory contracts. This is a standard procedure where the fund's directors review and approve the agreements with the investment advisor and sub-advisor. They looked at the quality of services provided, performance comparisons, and fee structures. The board seemed satisfied with the arrangements, noting that the fund's performance was generally in line with its peers, and that the fees charged were considered appropriate. So what's the takeaway? Dreyfus Money Market Fund appears to be operating smoothly. As a money market fund, you have stable N-CSRS and income generation. The big story here is the different expense ratios between the share classes, with premier shares being the most efficient and service shares having a fee waiver to keep its costs competitive. The fund's heavy reliance on repurchase agreements means it's keenly following short-term interest rate movements and managing those risks diligently. The diversification across commercial paper CDs and repos demonstrates a strategy aimed at both income generation and capital preservation for investors. This report shows a fund that's essentially trying to maintain a steady ship in the money market waters with clear cost structures for each investor type, and a board that's actively overseeing these arrangements. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. We've got a great community there for all things corporate finance. Thanks for watching. See you next time.